is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Friday morning. Thank God it's Friday, huh? I'm really meaning that this time. Let's just open up with the Big Mama Index here, the S&Ps. Let's take a look at what's going on. This is our daily profiles. Nothing really going on. Had a little bit of a volatility yesterday, but man, if you can call that volatility. The VIX really didn't even move up hardly at all when this market was caving in a little bit yesterday. Caving in, if you can call that a cave in. Didn't really move the VIX. I was watching it, and I've been talking about that non-directional option play, and still standing by that. As I think the Honorable Jay said earlier in the den, I saw that it's a rumor that at some point the market may sell off this year. You don't know when that's going to happen. It's pretty much guaranteed that it probably will happen at least once during the year. It'll rally about 1,000 times. But as we look at this, it's really difficult to try to figure out what's going on here. I mean, a lot of things just kind of pointing north, but there's no free trade out there. There's no free lunch. And, we could get a little bit more of a dipsy-do before we rally again, or we could get a rally before we do the reversal. So kind of I don't know really any other way to trade it than a non-directional trade right now. So let's just kind of keep surfing down the usual suspects this morning, get some perspective. The dollar, here's, we didn't close terribly bad yesterday. We kind of closed up on that inflection point, but, a little bit too rich for my blood on the downside here. You've got 99.96 down below, and then you've got this 101.35. You'd want to see more of a significant close than what happened yesterday to kind of get excited about nibbling on the intermediate. Here's the long term. We talked about this profile appearing below price action a month or so ago. That's still very bullish. We don't have any new overhanging supply trying to appear here. So, it's kind of a still long and strong long-term intermediate. You got a possibly situation where you can put the brakes on a little bit here and just kind of wait and see. Here's that VIX. And here's our super mega volatile VIX calculation here, 11.5. Here's yesterday's little bit of a spike, but nothing, just kind of really was depressing to watch this thing kind of settle back. But that's kind of what you want to see, when markets pull back like that and you see the VIX not really wanting to budge too much. Had a little bit of a spike yesterday, but settled back. I mean, that means that it's pretty much definitive. Nobody cares. So it's actually nice to see that from that non-directional option attitude. Let's take a look at the Shanghai really quick. This is something I've really been keeping my eye on. You got a real serious line of support between 3,300. This is the CSI 300 and 3,309. So you've got these, this kind of DMZ down here on the weekly and the daily, and I think we've got some decent support here on the Shanghai. You could look at this as, hey, we could have another run down south, but I'm looking at this as a supportive area and a really big line in the sand on the long side here. Let's take a look at the Nikkei. We're going to kind of surf around the globe here a little bit this morning. The Nikkei, we had talked about maybe not looking at this from the short side, even though we have pulled back a little bit. This was more of a target, kind of long target type situation. When you see these yellow bars, these peelbacks in the scanner, and I can show you There's one right there on Adobe Systems on our daily. That means that, we've got a new profile attempting to appear. A lot of times these fair auctions are completely explored. Statistically speaking, you have to watch out for that. And, when we look at that unfair high there, that's really something you can sell, but it's more of a target-rich environment in kind of a trend up here. So this is the Nikkei on the daily. All right, so we don't look at this index too often. It's the Hang Seng futures. Similar setup here right now happening just like the Nikkei. We're getting into, yes, the Nikkei, excuse me. I was having a brain fart there. Unfair highs, 22,979. We're kind of there. If you're looking to find something on inflection points to be able to play defense, you've got a really cool situation here. So I like this actually from the short side right here, and we have pulled back a little bit this morning. Let's take a look at gold. All right, so gold, we talked about this from the long side. I know you've tired of hearing me beat my chest about this, but 1211 and that general area was the target situation. I think we got as high as 1207. So, what do you do with gold now, considering that the dollar, may creep higher? I think gold's just kind of met its targets, and this is literally a no trade right now. I think it's done everything it's supposed to do on a retracement back up into the top of the balanced area, and we could just float around down here. So I don't think gold is anything to even look at right now until we either get outside the 1211 border or possibly come back down into this 1169.40. And short-term people, if you look at the 240s, you've had some support this morning at 1192. You can always find reasons to trade. We all know that. You can always see things that aren't there. But if you're trading on a short-term basis, 1192, I mean, gold's had the pullback, and, now we're just kind of smack dab sitting here. And not a lot of leverage in gold right now on the long-term or intermediate term. So let's hit crude. Let's see here. Okay. All right. Crude just kind of hanging around above this 52.26 again. If you've been watching this show, I've been a little bit more partial to the long side of crude. Here's the 240s. Really don't see any reason to short this instrument right now, especially if we don't get a weekly close back in the balanced area. If we stay above 52.26, it's pretty powerful. Really kind of block out the short side. Okay to be long, not okay to be short situation. Let's take a look at the 10-year. And we're going to take a look at this. Here's the weekly on the 10-year. We're going to take a look at this a little bit deeply when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So we're wrapping up last segment with the 10-year. You really can't look at this from the short side right now. I mean, we talked about looking at this, trying to nibble on the bottom when we kind of had that gold action set up around 123.10 into 123.20, kind of a DMZ to kind of back in and play defense below that 123.10. I think we've got let's see here. Okay, I think we've got a caller, Victor from New Jersey. Victor, you there?
Yeah, how you doing? I go to
Good.
a website called eno.com, and I use a 1-minute chart. I use a 1-minute chart on gold, and I found fake prints on July 15th of 11:30 in gold. October 10th it was 11:30, and I just saw one last night at 11:30. So I'm wondering if it's going to go back down there.
You saw what prints? Fake prints?
Yeah.
Is that what
If you go to check it out, you'll see it.
Okay.
So I'm wondering if you think it will go back down there.
Okay. Well, first of all, thanks for calling in. It's always good to have some perspective from the people who watch TFNN. But Victor, did you see what I was speaking of earlier on gold?
No, I just started listening.
Okay. Well, just to recap that, I can't really do the show based around short-term time frames because they're kind of invalid directly after the show. So we normally kind of look at daily and weekly setups. And what I was saying is we had an extremely ripe setup about a week and a half ago or so, where we closed back in the profile on a long-term weekly above 1146 and then retested the bottom at the same time the dollar was kind of doing its relevance thing to give us a little bit more idea that it was okay to start getting into the long side of this. We talked about initial targets of 1169. That was hit. We went past it. We came back and retested it. Everything looked great with the dollar repricing, and that was okay to be long again there. And we've talked about targets above 1169 around that 1211 neighborhood. So what happened yesterday? We reached it. We've kind of backed off, got into that neighborhood, and now we're just kind of spinning around still up here. And for short-term guys, we talked about 1192. that was in force on the 240s. If you can see my screen, this is all within our scanner, all these levels, all this kind of mantra. The 1 minute charts, I haven't seen any bad.
Go check it out. I track all this stuff. So it's the third time, so I think we're going back down there. The trading gods give you a little.
Where were these bad prints? What date were these bad prints?
Well, the bad print was last night. If you go to eno.com and go to a 1 minute chart.
Okay.
And I've seen it 2 times before. I gave you the 2 dates. July 15th, that's when we had the Turkish coup, and October 15th. And we did get 11:30, 11:26 in December. So I'm thinking we're going back down there.
Well, I mean, I tell you what.
$64. What does Larry always say? That golden number with gold is $64 or something?
Yeah, I'll tell you this. I mean, we've kind of exhausted ourselves, in my opinion, on gold. I kind of think you're barking up the right. Would I buy what?
Would you go with dust right now? Buy dust?
No, I'm just kind of I'm not as sophisticated as you on gold. I'm just looking at the underlying, and I'm looking at more longer term time frames. But I think you're barking up the right tree by kind of saying, okay, gold's done its thing. We've kind of exhausted the entire fair. We've kind of exhausted the fair auction on the upside, and we could start kind of relaxing here a little bit and just moving back down. So I think you're probably, at least got the right, blocked out the right side of the marketplace here. But the trade's kind of over for what we've been talking about from 46 up to 12.11, and I'm just happy as heck that it made that move. I mean, the dollar really.
You get a chance, just check it out. I'm telling you, those trading gods out there give you a little inclination of what's going on.
All right. Well, thanks, man. Right. Thanks for calling in.
Oh, thanks sure. 999 on gold. 999 on gold. Bye.
Okay, man. Thanks.
Upside down at 666. Bye.
Appreciate it. Okay. Well, that's something I've never really looked at, and I will kind of take a look at it now. So we talked about gold. Let's take a look at the 10-year. Here we go. All right, so let's take a look at the 10-year. God. Okay, let me get my head turned back around here. All right, so we talked about this. It's really, at least right now, it's kind of okay to be long, not okay to be short. But you really take a step back and you're just kind of meandering around in a pretty wide profile here. I don't look at this like the gold situation. I mean, I'm a little more timid to try to, get long big time treasuries right now. So we talked about kind of the riper trade was the 30-year, I guess. The 10-year's been a nice little pop, and it was nice to kind of base it around that 123.10.20 to just kind of get the engine going. But the 30-year, I think John from Philadelphia had been asking about this. Just got insane insight when he calls in. It's kind of like that gold trade on the 30-year, on the gold trade setup on the 30-year also, and 148.29 was that kind of come back and let's get the massive risk reward scenario in our favor with the stops below there. And then we talked about yesterday, we hadn't quite reached our targets yet. And if you look at this is all in the scanner, guys. You don't need these charts. I don't know why I show these charts. I don't know why I don't show a product that we're actually trying to sell. I'm just kidding. 153.31. We reached a high yesterday of 153.31. So that was that kind of target. And, you got to take something off the table when you get into these inflection points. We've just kind of really had a good move here. That move really, if you add everything up here, what is that? 150. It's about a five handle move in the 30-year off the bottom here, and it hasn't really been a lot of pain involved. This has been kind of a slow march forward, and the dollar has really helped this situation out recently. So it's kind of been cool. Let's see. And it is Friday the 13th, and I did not know that, and thanks for putting that in my head for the rest of the day. Let's take a look at a couple other things here. The silver trade, the March, this, again, we've talked about this one. Not really excited about this one, just been passing completely on the silver trade. Didn't see the leverage relative to gold, so we're going to not look at that. The XLF, we've got some bank stocks coming out today, namely Bank of America, Wells Fargo, JP Morgan, the usual criminal lineup. Man, does anybody have respect for a bank these days? It's amazing. Don't get me started. Let's take a look at and envy. Envy's the word that they can get away. I'm just kidding. That's not envy. I don't respect them. The XLF, just kind of terrifying to really short this thing. Let's take a look at a couple internals that are coming out with earnings announcements. JP Morgan, namely the head of the criminal enterprise. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And it is Friday the 13th. I'm going to stay inside the rest of the day. Kind of in a room with a shotgun out the hole in the door. Let's take a look at a couple of... Oh, God, wrong stock here. Let's take a look at... take a look at Bank of America. Let's see. These are Friday the 13th real prints, I guess. 22.75. All right, so... You know, these are not ones to really look at this is a great example of, we're kind of in the middle of a fair auction here, or kind of in the upper band of it. We could, you've got kind of back the truck up numbers at 2055. I just don't see any reason to mess around with this in any other way, except if it closes above 2339. I'm doing a lot of what if scenarios on this one. And then maybe the next week reverses back down into the fair auction. Then I think you could actually start getting some downside moves. But you're going to have to see probably a reversal type situation first if you get above. And then, these are definitely not the weaker stocks in a market that's kind of moved up. And you just got to not try to be a cowboy on things like this. I mean, there's definitely some upside in trying to find things that are too high to short. But you got to really kind of try to make it boring, I guess. Go into the scanner, look at the dashboard, look at some custom sorts. Here's stocks that are just kind of lifting up into places where you can kind of whack them, Bed Bath and Beyond. Oh yeah. So this is the boring trade, and it's the gift that keeps on giving. It doesn't, and these brick and mortar stores, man, I don't know if I'm sure David White is probably very on top of this, and Tom, about the numbers that came out yesterday, the sentiment on, the JCPenney's of the world, this year's, the Bed Bath and Beyond. I mean, these are ugly, and not even seeing them as investment opportunities anymore. So these are some sick situations, and this XLY. You've got some other things going on in here. Let's see. Here's Mattel. Yeah, that's not really a great opportunity there. But and let's go right into that XLR really quick. Staples and discretionary. Let's actually look at them on the E-signal charts really quick. XLY. I hear you. Okay. Hold on. Let me get back to the dashboard here. Sorry, guys, I'm a little messed up here. Let me get my head screwed on again. Some things are stuck on my screen. All right, so let's take a look at the XLY. This is consumer discretionary in general. Obviously not making higher highs when the market's kind of been, eclipsing those areas up there. But, the ETF in general, 83.18, we're still kind of spinning around long-term profiles, as well as, let me pull up the weekly here, sorry about that. Here's the long-term weekly. Sorry, I was on the daily there. You're getting into really a massive inflection point here that you got to pay attention to, 83.88 on the XLY. So we've kind of had a good bounce here. You've got to take that for what it's worth if you've been long. But if you want to go short, you actually had a pretty ripe opportunity on the XLY. Let's go into the staples here really quick. And again, talking about not being a cowboy, this is, let me see here. Okay. This is, you got 50.92 down below on the staples XLP. This is one that, is again showing sickness. And this is what I was talking about relative to the banks a while ago before I went out in left field and, had a brain fart there. 51.69. I think you could look at that. I mean, if you're looking for the market to come down, and we've talked about that non-directional trade on the indices, you've got a situation, a relatively weak situation relative to a market that seems like it could possibly be spinning around on a launching pad up here. So 51.69 stops above. Again, this kind of stays in line with kind of trying to make the trade boring and, exciting is something you sometimes have to pay for. So the XLP and some of the components in the XLP would be probably in order to look at from the short side. If you're looking to go short, try to increase the odds on a concept like this. So let's go into the daily. Let's look at the staples, which are showing breadth negativity here, by the way. And you can come in here and look at some stocks. Let's take a look at what's one of my favorite setups here. Well, let's just sort it out here. Boom, boom. There's one. Okay, so what I did is I went into the sector, and I wanted to see stocks that were trading below profiles that had just kind of empathetically moved up to the top of the daily profile. Estee Lauder. So let's take a look at it. Voila. All right, so not looking good, but it's come back up to the top of the range at best. This is it. And why is that doing that? Here we go. So 79.39, we've kind of got back up to the top of the range. Has been a relatively weak stock, not in the best sector in the world, and you've got an opportunity here. So I like to see that particular setup. It's not the best setup I've seen, on this type of scenario, but I like to see this type of opportunity. I know I can play defense very well. I know the risk reward is going to be really high, and when you're trading, putting together automated strategies and just your trading plans, the more you can get that risk reward scenario increased, the less and less you really have to be right. And that makes me sleep good. So that's a great setup in a great sector to be looking at something like this. So I'm going to go back and clean that off the board, and then I'm going to look at something like this, Kellogg, and this is it's about as ugly as it gets. So this one, you're looking at this one. I'm not looking to buy this. This is not an opportunity to buy. I'm looking at this sector as crap. And I'm looking at this as, let's keep it on the radar screen. Let's see if we can get a close. Now that we've got, this weekly situation the way it is, let's wait until we get another close below 71.68. And, you could easily start eclipsing lower lows, especially if the market comes down. So market rallies, you got a piece of crap here. It may just lift up slightly, but that's the kind of situation you want to be in. Make it easy on yourself. Find things that are relatively attractive for your type of attitude towards what the market's going to hopefully do. Guys, we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that
many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. But I was thinking last night about all these brick and mortar stores and the problems and the forecasts. Trump could. He's scared the mess out of the pharmaceutical industry lately. Rightly so. He could come out and say, you know what, if a certain amount of your business is done at a brick and mortar store relative to online, we're going to kind of give you a tax break, and we're going to increase the taxes on the other side and for the online guys, and try to balance this thing out for them. You could see a massive spike in these things. So don't think that you just kind of go to sleep. Put the hedge in if you need to, and definitely put the stops in if you don't have the hedge in. Anything could happen coming out of this guy's mouth, good or bad, for your stock, your sector. And I think that I think in general, some of the concepts he's talking about are just kind of protective for U.S. companies. And there's going to be some things coming out, tax breaks, things like that, some changes. I think, the market's kind of already pricing that in. But just remember, he could blitzkrieg a sector straight down or straight up based on some new MOs coming from the federal government on taxes in general. So just, keep that in mind. Stay the course, 1,000 points of light. Here we go. All right. So we talked a little bit about, the usual suspects. Please call in or ask me to hit anything that I didn't cover. That 30-year trade's been a cool trade. 5 handles, nothing to sneeze at. Let's restart our currency server here. Okay, here we go. I think we're seeing this. All right, so the British pound. Caught a little bounce off of that 120.90 area that John from Philadelphia and I were talking about. That was a decent little pop. I talked about it. If it happens, I don't know if it's going to be long-lived. It definitely reached the top of our daily profile, 123.15. Not a bad trade. That's a real decent amount of pips there. What is that? That's over about 250 pips. So now we're just kind of floating back down and gravitating back down to that weekly low. And this is kind of a wait and see for me. I haven't been a fan of catching a bid down here, but obviously it did pop. And it's kind of did what it was going to do, and I think we're just going to kind of float back down here. This is the 60-minute on the GBP, just kind of getting back down to reality here, in my opinion. Japanese yen. All right, so here's our weekly. You got to back the truck up numbers down here, 111, 67, 68. But, first line of defense, really, again, the regulator of those trades up. If you look at the daily relative to the weekly, what's going on, you are at, and we kind of did a little dipsy-do yesterday on this, you are at Custer's last stand here for the daily regulator. So this is something I'm really, really interested in. 114.24 stops below based on my appetite for risk. I'm going to give it a little bit of room just because it's a long-term killer setup still. I still think this particular instrument could go to 124, 125. That's not going to happen like an easy free lunch situation, of course, but you got a chance to pick a battle here. I don't mind taking a shot right now and then trying it again from the long side around 111.68. All right. Euro. Areas to find interesting here were 105.86, but I'm still trying to stay with the hedge on the long-term short there myself. Let's take a look at the daily. Nothing doing there. Next stop up, if you're trading the underlying outright, 108.002. So that's kind of where we're at. Getting back to below 105.86, 105.43 would be kind of, let's turn the gas back on the short side. I think we've got a caller, Tom from Las Vegas. Tom, you there?
Hey, I'm here. How you doing?
Doing all right. How are you?
Oh, I'm doing great.
Great.
So, I was going to ask you about this semiconductor business here. Of course, we've all seen what NVIDIA did here in the last couple of weeks, and the stock I'm very familiar with, and for sure they're doing a bang-up thing. But what I'm looking at on the SOX index is that the SOX, for about 13 years, it couldn't get over 560. And we made the last test of 560 on February the 11th of this last year. And look at it now. It's trading at 944 on the high. I wanted to see what your system says about that.
Okay, so I've got $SOX up, the Philadelphia semiconductor sector. And thanks for calling in, by the way, Tom.
You're welcome.
Okay.
Appreciate it.
You're welcome. So this is the index itself. This thing has just, as you know, incredible move up. What kind of time frame are you kind of looking at this? Like, what's your general investment or trading kind of protocol? Like, are you looking for short-term kind of attitudes here or long-term?
Well, I'm looking for a short-term divergence that turns into a long-term trend, of course.
Okay. Okay. So right now, on the long term, you just got massive support at 864. 932, we kind of had that. We don't have to explore this whole fair auction, but you've had kind of a new profile appear here. 932.81 is the top. The broad market itself is just kind of sitting, looking like it's on the launching pad on the S&Ps, and the NASDAQ obviously is stronger. This is more kind of NASDAQ related. I think if you're looking for a short-term trade, I think you got to just, if you're looking for a contra trade here against a long-term trend up, I think you got a chance you can play defense above 932 on the short side, but I think you got to wait and see here on the long side, just kind of wait for something else to develop because, we could kind of bounce around here and actually pull back a little bit. That's my take on it.
Are you into candles at all?
Not really. I kind of try to keep things simple with
you've studied it and you've.
Yeah, without question.
So we had one yesterday on this thing. It's a Dragonfly Doji. You might want to take a look at that.
Okay.
On the SOX index, and those are interesting. They tend to resolve to the upside, so we'll see.
Yeah, I think 932.81 could be your stopping point, though, if there is any more upside, and then you got to kind of wait and see if you're looking at it from that angle. Can we look at NVIDIA while you're on the phone?
Yeah, let's go for it.
Okay.
Let me pull it up here.
Yeah, we had somebody. I remember this. We had somebody call in. I think when we were trading around 65. And he was talking, this thing's just gone too far, too fast, blah, blah, blah. And, yeah. Can you hang on?
Sure.
Okay, we'll go through the next break here and pick Tom back up. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Tom, you still with us?
I am. So just a little background on NVIDIA. They just were out here at the CES show, and they showed their driverless technology, the chips and stuff they're doing for that. And pretty impressive, it really was. You know, of course, I don't have to say that, you know, they're leaders in graphics and, you know, all kinds of stuff that they do. But it's kind of breaking out as a company. And so, yeah, let's take a look at NVIDIA. But then after that, what we need to do is look at the dog, which is AMD, and check that out.
Okay, sure. All right, we got about 3.5 minutes here. So
go for it.
All right, so when the gentleman called in, this is just a kind of proof of concept about, you know, he's like, this thing's gone up too high and it's reached these exhaustion indicators and things like that. I you know, you talked about candles and all that. I just try to keep it simple, and then when the thing hasn't broken technically relative to profiles, I don't really look at, you know, at it too much of reversing, and it hasn't really. I mean, but going down into that lower term time frame, the daily that's kind of been regulating this long term weekly trade up, we are kind of hovering around this 101.09 area now.
Right.
And this would be the first break down literally that could be looked at, even though the weekly hadn't shown any remarkable hint of that, of looking at it from the short side.
But you got high volume there at the high on the 28th, so that's what you're fighting with if you go back and test that.
Yep.
Right.
So yeah, that's kind of the deal in NVIDIA.
I'm not short.
Okay, good.
One. Yeah.
Thank God. All right, let's take a look at AMD.
Right.
So, God, this is wild, isn't it? I mean,
it is.
Yeah, we get the new profile. We kind of explore it all. We break out. We go back and retest. Now, on the long term, on the weekly, you got 1010 really decent support on this, and that 1042 also kind of bottom of the profile on the daily. So you're thinking that this one may come apart quicker than NV?
What I'm thinking is probably more likely. There's been a ton of acquisitions in this area. It's probably going to get bought out. Somebody knows something. That's what my inclination is.
Yeah,
it's a dog. I mean, it's a lousy company. There's no two ways about it. but if you look at the way this thing's been rolled up, I mean, the semiconductor industry, there's been that's where all the acquisitions have been. I mean, that's just one after the other. So it's takeover meat. It's I'll send you an article if you like. It shows you all the different companies that are in that category.
I'd love to see
it. That one, Marvell, a couple of others, yeah.
And it's definitely, you've definitely got better things out there to short than these particular stocks. Technically,
that's right.
Yeah. So,
but on the index side, I think that one is, like I said, that's a lot. 560 to 944.
Yeah.
Without really much of a pullback, I'm really watching that one closely.
Yeah, there's a lot of bang for your buck in trying to catch things that can have massive moves down that have gone too high.
Well, semiconductors are known for that.
Yeah.
Right. You remember the .com crash? You saw what happened there. That was.
Unfortunately, I remember it. Yes.
Hey, well, it's good talking to you.
Yeah. Thanks very much, Tom. Thanks for calling in. Enjoy the weather out there in Vegas.
I will do. Bye-bye.
All right. Okay. All right. So, some good, interesting information there. Just got to remind you guys, TFNN is not going to be open on Monday, so don't look forward to the network that day. Here we go. Let's take a look at one more stock, Amazon. I got to pull this up really quick. We don't have time today, guys. We're going to be back again on Tuesday. Enjoy the rest of the network today on TFNN on Friday here. We're closed on Monday. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.